Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar wavers around the 60-day simple moving average in the region of 66.75 to 67 cents, while the US dollar index rises to around 103.50, nearing a potential reversal. The slightly firmer stance emerges for the Australian dollar as the unemployment surged by 51,600 jobs in September, following a 47,500 increase in August, while the unemployment rate was unchanged at 4.1%. Meanwhile, in the US, Wednesday's economic calendar was light, but activity is likely to pick up on Thursday when all eyes turn to the US retail sales, with an expected 0.3% rise in September. So with the level holding somewhere around 66.75 to 67 cents, I expect to see a move through the level of 67.15 and on towards 68 cents, given the fact the bullish divergence is quite strong and therefore could see a break further once we clear the 60-day moving average, and as I mentioned, on to 68 cents. Turning to the euro, the market is somewhat weaker as the dollar index increased to 103.50, and with all eyes now on the ECB's rate decision on Thursday, which expects a 25 base point cut, which could see a move from 3.65% to 3.40. As I mentioned, the economic calendar is light, but all eyes will be on the US retail sales. So turning to the technicals, the ADX is overheated. We are extremely oversold. So therefore, it does warrant a move to the upside and look towards the region of 109.25 and potentially on to 110. Can't get bearish at the bottom here considering where the RSI is and the overheated ADX. So I do anticipate a bounce very soon. Turning to dollar yen, the market is somewhat sideways as the indicator, the RSI, is dropping and therefore does give some concerns. We could be in for a downturn that would see a move back to 147.5. As the market still struggles around this 149 area, I do anticipate the market eventually to break down, given the fact the support the indicators are warranting this downside move. Sterling plummeted on Wednesday following the UK CPI inflation for September missed forecast, dropping to 1.7% year on year from 2.2%, below the expected 1.9%. Core CPI also eased faster than anticipated, falling to 3.2 year on year from 3.6, beating the forecast of 3.4. With that, and with the drop of the UK inflation, now anticipates much talk of a 50 base point rate cut. Let's see if the market can rebound off 129.60, and if so, look back towards the region of 131 to 132, but still be very wary of the current weakness, because a close under 129.60 could give further weakness down towards this trend line, seen at 128.20 to 50. Wrapping up with commodities, gold is edging higher and closing in on its target of 2,700. I do anticipate profit taking from there, so traders should continue to closely monitor signals and reassess their trading strategies or risk management, just in case we get a rejection, and look back towards this trend line, which is somewhere around 2,330 to 40. Oil, well, the market reversed the gains on Wednesday and now looks back towards the key area of 69.70. I do anticipate that the market may bounce from this level and look back towards 72 to 74 and reassess from there. Well, that's a wrap. Thank you for joining me. As always, we'll have the intraday report and hope you enjoy the great start to the day.